So what are brokers? So a stockbroker is simply a person acting as an agent of a client who buys and sells securities such as stocks, bonds, futures, options, commodities, etc. on behalf of a client. Now, these are authorized professionals. I mean, they have license and some certificate that shows that they are brokers. And in US, you have to pass the Series 7 and either Series 63 or 66 exam to become licensed and broker. Also, the requirements to become a broker differs from country to country. So one country may require you to have some years of work experience and pass some examinations like 3 or 4 modules, whereas other may require only 1 or 2 exams to pass and then you are a broker. And nowadays a bachelor's degree is a must, although a master's degree is always preferable, but many look at least for a bachelor's degree. So these brokers usually work under firms called as brokerage firms, and these firms buy and sell securities of their clients. Now the thing to note here is that when securities are bought and sold, it is typically in the name of stock brokerage firms, but the persons who buy or sell securities are stockbrokers. And nowadays computers also execute a lot of trade, and it's not only limited to stockbrokers. Like you can execute a trade from smartphone such as iPhone, and majority of trades like 70% or so are executed through computers only, or basically electronically. So coming back to stockbrokers, when these guys act as an agent for buying and selling securities, then they charge a commission or some fee for doing that. And that's why it is considered to be a very lucrative profession, because the fee they charge makes them a lot of money. And many brokers are multi-millionaires also, because billions of shares are traded every day in the stock market. And it's not only about the stocks, there's also bonds, futures, options, and various other securities. So there's a lot of money in this profession. But again, as usually, hard work is involved, and it's not easy money. So as of now, you know what stockbrokers are. But let me tell you a bit about brokerage firms also. So till now, you may have an idea of what brokerages are, but let me explain a bit more so that you can get to understand in deep as to what brokerages are. So the basic work of these brokerage firms is to buy and sell securities of their clients. But they actually do a lot more than that. They have a list of clients whom they serve, like providing the services. They appoint salespersons to open brokerage accounts, usually called demat and trading accounts. And I'm going to talk about these accounts in details in the next section. But for now, let me just focus on this tutorial. So these firms appoint various salespersons so that they open new accounts and revenue comes in regularly. Also, these brokerages provide softwares. So I told you that trade happens through computers also. So these firms provide softwares to their clients who want to purchase securities themselves. And they have to maintain various documents of clients also, as to when clients purchase which security, on which date, and also at what time they transacted. So they regularly provide contract notes to their clients. And contract notes means that they are providing details of a trade for a particular period and typically for a day. So if you trade today, like you bought or sold a share, let's say Google, then all the shares you bought and sold, and at what price you bought and what quantities you bought or sold, what were the charges applied for buying and selling these shares. So they provide all these information every day to you, and that's basically what a contract note is. But if you want to remember what a contract note is in simple terms, then simply remember a bill. So just like an electricity or restaurant bill, you get all the expenses and details about them. So in a contract note, it's the same. And one more advantages broker provide is facility of margins. It means like buying securities on a credit, which means that I want to buy securities but I don't have enough money. Then I can use margin allowed to me, and using which I can buy more securities worth more than the amount that I currently have. Or let me give you an example. So if there's $1,000 stock and I want to buy that stock, but I don't have that much money, I have only $500. So if a broker is providing a margin of 20% on a security, then that means I have to put 20% of the margin money and then I can buy that security. Which means that the $1,000 stock which I wanted to buy, I can now buy that stock using the margin for only $200, because 20% of $1,000 is $200. And that's what the requirement is. And now any profit on that stock will be mine. For example, if there is a profit of 50%, that is, the stock moves from $1,000 to $1,500 in a matter of 4 days, then technically my profit is 50%. But considering I paid only $200 and the stock's total profit is $500, then in reality I had actual profit of 250%. And that's the power of margins. But they are dangerous too, because you have to risk a lot and you can lose a lot of money. And that's what basically margins are. But if you use margins, brokers charge another commission. And some brokerage, typically full service brokers, also have a team of research analysts to research for quality stocks and to recommend them to buy a particular stock or sell one. So these brokerages do a lot of work. And these big companies are called brokerage firms. But in my next tutorial, I will be talking about different types of brokerage firms. But right now, that's it for this tutorial.